What's happening, crypto fam? Get ready for a rapid-fire rundown of the news that's shaking up the digital asset space. The market is moving at lightning speed, and if you're not plugged in, you're missing out. We've got blockbuster stories dropping that could redefine how major players interact with digital currencies and shift the entire economic landscape. From epic corporate showdowns to groundbreaking community transformations and critical economic indicators, this is the intel you absolutely need to stay ahead. Don't blink, because the next big move is happening right now. We're diving deep into the strategies of titans, uncovering the hidden gems of grassroots innovation, and dissecting the forces that will shape the future of finance. You're about to get the hottest takes and the most crucial updates, all delivered with the energy you expect. Let's get into it. First up, we're pitting two giants against each other. It's MicroStrategy versus Tesla. Whose Bitcoin strategy is the winning play in the final quarter? This is a clash of philosophies that could set the precedent for corporate adoption. Then, we're exploring how Bitcoin is emerging as a powerful dollar alternative, fueled by shifting economic tides and a surge in national debt. This story is packed with insights into market movements and historical patterns. Plus, prepare to be inspired by the incredible transformation of Zonte, El Salvador, where a community built the world's first Bitcoin circular economy, turning a past of violence into a future of innovation. And finally, we'll cover the latest market movements, including a brief pullback that's got everyone talking. Stick around, you won't want to miss this. Make sure you're subscribed and the notification bell is on so you never miss an update. Corporate titans clash, MicroStrategy versus Tesla. In the rapidly evolving landscape of corporate treasuries, two distinct approaches to Bitcoin are about to face their ultimate test this quarter. MicroStrategy, a company that has fully embraced Bitcoin as its core identity, is locked in a strategy of aggressive accumulation, while Tesla, after an initial foray, has adopted a more reserved stance. This divergence in philosophy is set to be scrutinized as new accounting rules come into play, potentially reshaping how investors perceive their digital asset holdings. Michael Saylor's MicroStrategy has transformed into a veritable Bitcoin powerhouse, with a staggering 629,376 BTC accumulated by August 2025. This isn't a casual investment. MicroStrategy has actively engineered its financial structure, issuing billions in debt and equity to fuel its Bitcoin acquisitions, particularly during market downturns. This creates a powerful feedback loop. Buying Bitcoin drives its stock price, enabling further fundraising to acquire more Bitcoin. It's a bold, all-in strategy that positions the company as a leading corporate Bitcoin whale. In stark contrast, Tesla's journey with Bitcoin has been marked by volatility. After a significant $1.5 billion investment in 2021 and a brief period of accepting Bitcoin payments, the company cited environmental concerns related to mining as a reason to halt transactions. More notably, Tesla divested approximately 75% of its Bitcoin holdings in mid-2022, reportedly to bolster its cash reserves, leaving it with an estimated 11,509 BTC. Unlike MicroStrategy's unwavering commitment, Tesla's approach has been characterized by strategic exits and a more cautious holding pattern. The game-changing element for both companies, and indeed the broader market, is the new accounting standard implemented on December 15, 2024. Previously, companies could only recognize losses on their crypto holdings, not gains, until the assets were sold. The Financial Accounting Standards Board's FASB update, ASU 2023-08, now mandates that companies must mark their digital assets to market each quarter. This means any fluctuations in Bitcoin's price will directly impact a company's reported net income, regardless of whether any assets were traded. A significant Bitcoin rally could dramatically inflate reported profits, while a downturn could conversely depress them, even without a sale. This new accounting reality adds a layer of complexity for investors, but the market has already priced in the differing strategies. MicroStrategy's stock is largely viewed as a Bitcoin proxy, while Tesla's valuation is primarily driven by its automotive and energy ventures. The broader economic climate, including the Federal Reserve's monetary policy decisions and the U.S. budget deficit, will also play a crucial role in the fourth quarter. Potential interest rate cuts could spur risk-on sentiment, benefiting Bitcoin, while a hawkish Fed might dampen enthusiasm. Furthermore, the SEC's upcoming decisions on various crypto ETFs in October could significantly influence market liquidity and sentiment. This clash of titans highlights the diverse paths companies are taking in the digital asset era. Stay tuned as we break down the factors that will determine which strategy triumphs in the coming months. Bitcoin's rise as a dollar alternative gains traction. The global economic landscape is increasingly favoring Bitcoin as a viable alternative to the US dollar, driven by the Federal Reserve's anticipated monetary easing and a surge in the nation's debt. Analysts suggest that as the Fed prepares to cut interest rates, liquidity is likely to shift towards alternative assets like Bitcoin, creating a liquidity flywheel effect. This trend is amplified by the record-high U.S. national debt and money supply, which fuel concerns about inflation and the long-term purchasing power of fiat currencies. In this environment, Bitcoin is being reevaluated as a digital store of value, akin to gold, offering decentralization and a hedge against inflationary pressures. Historical data provides a compelling case for Bitcoin's performance during periods of Federal Reserve easing. Notably, following the Fed's rate cuts in March 2020, Bitcoin experienced a remarkable surge of over 300% within a year. This historical precedent has led some market observers to predict a similar upward trajectory for Bitcoin in 2025-2026, aligning with current macroeconomic forecasts of Fed policy shifts. The convergence of these factors suggests a potentially bullish period for Bitcoin, as capital seeks refuge from a potentially devaluing dollar. From a technical and on-chain analysis perspective, Bitcoin shows strong indicators of accumulating value. On-chain metrics reveal significant accumulation occurring within the $50,000 to $55,000 price range, with key resistance levels identified around $70,000. Traders are advised to closely monitor on-chain data, including spot trading volumes, perpetual funding rates, and open interest in Bitcoin futures, to gauge the flow of capital into the crypto market in response to central bank policies. Furthermore, Bitcoin's correlation with broader risk assets, such as the Nasdaq 100, indicates that it may mirror the positive trends seen in traditional markets as lower borrowing costs and increased liquidity take effect. Institutional adoption, particularly through Bitcoin exchange-traded funds, ETFs, is another significant driver of Bitcoin's trajectory. Growing demand for these financial products is expected to inject more capital into the market, potentially increasing price volatility and liquidity. On-chain data further supports this optimistic outlook, showing increased activity from large Bitcoin holders, often referred to as whales, who are moving substantial amounts of Bitcoin to cold storage. This behavior is widely interpreted as a strong signal of long-term confidence in Bitcoin's value proposition and its potential for future growth. The interplay between Fed monetary policy, the looming 2026 debt wall, and global liquidity dynamics creates a complex but potentially advantageous environment for Bitcoin. Market participants are urged to pay close attention to official communications from the Federal Reserve, monitor real yields, and track the U.S. dollar index, DXY. Historically, a sustained decline in real yields, and the DXY has often correlated with improved performance in risk assets, including Bitcoin. This shift towards Bitcoin as a digital store of value is a powerful narrative shaping the market. Next, we explore a community that has fully embraced this digital revolution, building a pioneering Bitcoin circular economy. Zonte, birthplace of the Bitcoin circular economy. Nestled along the coast of El Salvador, Zonte is a testament to the transformative power of community and innovation, having become the cradle of the world's first Bitcoin circular economy. Once a region plagued by gang violence and limited opportunities, this picturesque beach town has undergone a remarkable metamorphosis, driven by a collective vision to create a better future. The story of Zonte is one of overcoming adversity, fostering hope, and demonstrating how digital currency can be a catalyst for profound social and economic change. For decades, Zonte was ensnared in a cycle of violence, with high homicide rates leaving many children orphaned and vulnerable to recruitment by criminal organizations. The limited economic opportunities were starkly divided by geography. Those born near the beach were destined for fishing, while those inland became farmers. For women, traditional roles as housewives were the norm. The only perceived path to a better life was emigration to the United States. This grim reality fueled a sense of hopelessness, making dreams of a brighter future seem unattainable. However, a beacon of hope emerged in the form of individuals like Ramon Martinez, known affectionately as Chimbura. Chimbura, along with a group of dedicated locals and international supporters, embarked on a mission to uplift the community's youth. Their initial goal was simple yet profound: to provide children with more opportunities, steer them away from delinquency, and reignite their capacity to dream. They recognized that while dreams are essential, the practical tools and knowledge to achieve them are equally critical. This realization led to the establishment of initiatives like Hope House, founded by Jorge Valenzuela, who was deeply moved by the lack of opportunities that led to the loss of friends and community members. Jorge, a former farmer with a passion for surfing, witnessed firsthand the bleak employment landscape that left young people with few choices: join a gang or become private security. The lack of educational and developmental opportunities drove many to seek greener pastures abroad. It was on the beach, amidst the waves, that Jorge and his fellow surfers, like Hervin, began to share their knowledge and passion, not just for surfing, but for revitalizing their community. They identified tourism as a key avenue for connecting with the outside world, showcasing Zonte's natural beauty and creating new job prospects. Jorge, a surf instructor, understood the sport's potential to be a foundational element in this transformation. The pivotal moment arrived with the involvement of individuals like Mike Peterson, Melissa, Carlos, and Alex, who were drawn to Zonte's charm and its people. Their commitment to the community, coupled with the locals' burgeoning aspirations, created a powerful synergy. They initiated programs teaching English, connecting with tourists, and fostering a cultural exchange that broadened the horizons of the local youth. This exposure instilled a sense of possibility, demonstrating that circumstances need not dictate destiny. Mike Peterson, in particular, played a crucial role in systematizing community efforts, emphasizing the importance of filling the children's love tank, providing the emotional support and guidance that many had lacked. The concept of a Bitcoin circular economy emerged organically from these efforts. By integrating Bitcoin into local commerce and daily transactions, Zonte created a self-sustaining ecosystem. This not only provided economic empowerment, but also fostered a sense of pride and self-reliance. The community's journey from a place of despair to a hub of technological innovation underscores the potential of grassroots movements and the disruptive power of digital currencies when wielded for positive social impact. Zonte's success story is a powerful example of how digital innovation can uplift entire communities. Now, let's turn our attention to the broader market trends and a recent, albeit brief, dip that has analysts buzzing. Market snapshot: Bitcoin experiences brief pullback. In a recent development that has captured the attention of market watchers, Bitcoin experienced a temporary pullback, dipping to its lowest level since early July. This minor correction occurred within a broader context of fluctuating market sentiment and ongoing discussions about Bitcoin's role in the global financial system. While the price action might seem concerning to some, it's important to view it within the larger framework of market dynamics and the various factors influencing digital asset valuations. The cryptocurrency market is inherently volatile, characterized by rapid price swings influenced by a multitude of factors, including macroeconomic trends, regulatory news, technological developments, and investor sentiment. This recent pullback is a reminder of this inherent volatility. However, it's crucial to distinguish between short-term price fluctuations and long-term trends. Many analysts view such dips as natural market corrections that can precede periods of renewed growth, especially when underlying fundamentals remain strong. Several key elements are currently shaping the market environment. The ongoing debate surrounding the US dollar's status as a reserve currency, coupled with rising national debt and inflation concerns, continues to bolster the narrative of Bitcoin as a potential hedge or alternative store of value. As the Federal Reserve contemplates interest rate adjustments, the flow of liquidity into and out of riskier assets, including cryptocurrencies, is closely monitored. Historically, periods of monetary easing have often coincided with increased investor interest in assets like Bitcoin, suggesting that current macroeconomic conditions could create a favorable environment for future price appreciation. Furthermore, the increasing institutional adoption of Bitcoin, evidenced by the growing interest in Bitcoin ETFs and the accumulation of assets by large corporate entities, signals a maturing market. While the specific reasons for this brief pullback are multifaceted and could range from profit-taking by early investors to broader market-wide deleveraging, the long-term outlook for Bitcoin remains a topic of intense discussion. On-chain data continues to show robust activity, with significant accumulation occurring at key price levels, indicating sustained confidence among long-term holders. It is essential for investors to remain informed about the broader economic indicators, such as real yields and the US dollar index, DXY, which often serve as leading indicators for risk asset performance. The interplay of these macro factors, combined with developments within the crypto space itself, such as regulatory decisions and technological advancements, will continue to shape Bitcoin's trajectory. This recent pullback, while notable, does not necessarily alter the fundamental long-term thesis for many market participants. This brief market correction offers a moment of reflection amidst the ongoing digital asset evolution. Join us as we wrap up today's essential updates with a quick recap and a look at what's next. That was a whirlwind tour of the hottest stories in crypto. We saw MicroStrategy and Tesla going head-to-head on their Bitcoin strategies, discussed Bitcoin's growing appeal as a dollar alternative amid economic shifts, celebrated the inspiring Bitcoin circular economy in Zonte, and touched on the recent market pullback. Don't miss a single update. Smash that like button, subscribe to Bitcoin Bulletin, ring that notification bell, and let us know your thoughts in the comments below. Plus, follow us on all social platforms to stay connected. We'll see you on the next one.